So yeah, just a bit of a brief. I think we'll touch upon the rupee appreciation or the apparent appreciation and what that exactly means and how things are going to go forward in this country as if we take that appreciation to be organic and natural and with its long term, sustainable, and whatnot. Just give me a second here, waiting for my co-host to join. Hello, Dhananath. Hello.
Hi, Akhila.
Yeah, I hope
I'm
you can hear
audible?
me too. Just give me a second, let me fix this.
Yes, loud and clear. All right.
Uh, shall we get started with?
Yes,
Okay. So,
I'm ready.
as I was perusing social media recently and the news cycle as well, there's been a lot of talk about the rupee appreciation at a massive rate, where some international banks have been calling it, the best growing currency in the world so far because it has appreciated by, I think, approximately more than 20% to date. And if I'm not mistaken, the buying rate or the selling rate is at 303 and the selling rate is at 313 in some banks. So I think that's a large appreciation or depreciation of the dollar, whichever way you want to look at it, in context. And so now when that came through, we've had a lot of discussion and a lot of discourse about this. Whether this is organic growth, whether this is sustainable, is this independent of macroeconomic factors, or is this just careful regulatory action taken from the CBSL and Treasury? What do you have to say about that, Dana?
Yeah, Akhila, I think there are multiple reasons. First is, if you look at, there were some regulatory changes in the first place. If you recall earlier, even when the currency actually crashed many months ago, from 200 to probably 350, if you recall, there was so many regulations, even, and also we ask people, even if you have some illicit money, that no questions will be asked, you can bring that money back to Sri Lanka. And at the same time, there was a big surrender rule that said if you bring dollars to Sri Lanka and it has to be converted 100%, and then there was a rule that if you have to pay back, you have to provide the invoices. And there was a very, very strong regulatory framework imposed by the central bank on commercial banks when the currency actually crashed. And now, after some time, they have relaxed the rules. And when they relax the rules, actually, what we can see is, so people expected when you have very, harsh rules, people actually will bring dollars. But actually, the opposite happened. Probably the dollars even existed in the market, it got disappeared. Even it disappeared to the level that we couldn't import or we couldn't pay the fuel ships, which was around the port. They were just hanging around there till we make the payment. So then things changed. Then there was a rule that at least it minimized, I think from 50%, if I remember right, it brought back to 25%, that the commercial banks have to sell dollars to the central bank. And recently that was removed to 15%. And now I think from 2 days before, it was completely taken off. That was one reason, because the logic is the spot market. What you mean by spot market is basically between banks, they basically buy and sell dollars. So basically the banks and people quote or put a bid on dollars. So that's what you call the spot market. So when those regulatory barriers was removed, basically the spot market started activating. And the dollar availability was high, because earlier there was, if you bring $100, earlier 25% was supposed to give back to the central bank by the commercial bank. Then it was reduced to 15%, and now it was completely taken off. And also the second reason was, earlier the central bank, after the currency crash, they came and again they did the same thing. They said, okay, now the dollar rate is 350, and they give like a play. They said the maximum that you can quote is two rupees and 50 cents. to the positive side and the negative side. As an example, if the dollar to the rupee ratio is 350, then the maximum that you can quote is to 352.50, or the minimum that you can quote is 347.50. And they said the depreciation, there can be a 5% play on the next day, or the average weekly, to minimize the play. So that has also been removed. So now it's pretty much like a free float. And but the difference was, just before this appreciation, the central bank pretty much had bought about $300 million, if I'm not mistaken, to build the reserve. So if that dollars were also available, probably it could have dropped more. But those are the main reasons I see. At the same time, there are import restrictions. So basically, even if you have dollars, it's very difficult to bring something because you have so many shortages everywhere. And at the same time, there was this 400 million tranche from the IFC for three commercial banks. And of course, there were sentiments that IMF will come and it will slightly stabilize us. So then people were started basically bringing the dollars or the foreign exchange. But this includes like the remittances and all that also have a slight increase because they realized, because they were also key holding the dollar. So those are the main reasons I see, as far as I can see, why there's
Right.
an appreciation.
So I think the next question then that we need to talk about is whether this appreciation or so-called appreciation is sustainable, and if so, is it okay for politicians, economists, bankers to start drawing parallels and predictability graphs and charts to figure out how it's going to work out? Because I think the central bank and the central bank governor today spoke of how if this carries on, that we might see inflation dropping down to single digits, and then therefore it might carry down as well. But then my question is, surely, even though that the dollar, or my thought on this is that regardless of the dollar market and the foreign exchange being to a certain extent existing in a free market space at status quo because there are no more restrictions. But when you look at the expenditure, I think that it's artificially pegged down in Sri Lanka at the moment because, like you rightfully said, imports are down. We're importing only a limited amount of fuel, and that fuel is then again, prioritized for energy generation as opposed to public consumption. And so the way I see it is that in the instance that we do carry on with this appreciation to be organic, well, not inorganic, but not based on macroeconomic factors, that this appreciation could be short-lived. And when I say short-lived, I definitely don't mean a week or two. There's quite, I think, at least till the end of the year until we see this hitting. Because once, let's say, the IMF deal happens and, economic prosperity grows and we start opening up our markets and our trade, surely these dollars will start to leave the country, right? Sorry.
Yes.
And in terms of importing things, medicine,
No, go ahead,
fuel, just non-essentials, as the state has marked certain things to be. And on top of that, like you rightfully said, when previously when there was a fixed rate on our exchange rate, and when it moved to a floating peg, as floating exchange rate as it's called now, we saw that remittances slowed down when it was pegged to a lower amount. And we saw that when the amount shifted up, as in the rupee depreciated and the dollar appreciated, our remittances started inflowing. And now we can see, or at least the talk of the town is that, it's because of panic that a lot of people are bringing in their cash as soon as possible because they don't want to see their dollars transfer their money before the dollar hits like below 200 or whatever. I also think that perhaps if it really depends on how the market reacts. Let's see by the end of the week. If people start to once again hold back their remittances and reduce the inflow, that we might be led to a bigger crisis. Well, not a crisis per se, but a bigger issue than we had in the past.
Yeah, I think, Akhila, I also see, because at the moment there are no, most imports are blocked. And at the same time, even opening an LC and this banking procedure has become so complicated, especially for international trade, because of the ratings that we have. They basically do not want to give a letter of credit because of the credibility of poor credibility of our system. And we also need to understand now for the last 2 to 3 years, vehicle imports, spare parts imports, most of the things are blocked. But now with the debt restructuring moving forward, some of these import controls, I think we have to remove. And in fact, I think some of the countries like European Union had warned because for them the trade is a two-way street. It's not a one-way street. And for an example, for Japan, we are a market for their vehicles. So we are, I'm not saying we are a key market, but of course there's trade happening between Japan and Sri Lanka. So when they go for debt restructuring, of course we can't say, look, you also have to give a 50% haircut, and also we are not going to import anything from Japan. Is very difficult to, it's a very difficult negotiation if that's the case. So I think some of those relaxations might come. So with that, of course, the demand for dollar will increase. So there's a chance that it will again appreciate. But I think there's a myth by a lot of Sri Lankans to measure the performance of the economy based on the exchange rate or like the stock market. They say, okay, there's a bull run in the stock market, so then the economy must be running very good and all that. And at the same time, when the currency is depreciating or when the currency is appreciating, they also make perceptions about the economy. I think both are not quite right. I mean, it may be an indication in certain instances, but it should not be the sole reasoning. I think the best example is before the currency crash, there was a bull run at the stock market. So if you were to measure from only with that reason, of course, pretty much we have taken everything not we haven't taken everything quite right. Same when the currency depreciates, it's the same. It mainly at the moment it's pretty much a free flow. I mean, it's the currency is floated. It depends on the demand and supply, unless central bank intervenes. I mean, as they have bought the dollars from the market before. If they don't buy the dollars or if they release the dollars from their reserve, if they don't, as long as they don't intervene, I think the market factors will determine it. But of course, the import controls and things like that will also affect. But my point is, it's not the people think there are only two ways to do it. One is either you allow the market to determine, that's called the free float or floating currency. Okay, people demand and supply that determines. That's one way to look at it. And there's another way that you call the soft peg, or like the central bank intervenes. Okay, they keep the exchange rate at 300 or 200 or whatever that amount. So if there's additional dollars, they basically buy and put it in reserves. And when there's less dollars, basically they dilute their reserves. So, and then they keep the exchange rate safe. But there's another system called currency boards, which of course there's debates where it's a different system for both of that. Basically, you keep because what people don't understand is the rupee is a monopoly. LKR can only be, so as the dollars, LKR can only be released to the market by the central bank. Neither you or me, just because we have a printer at home, we can't just the Sri Lankan rupees and add it to the market. So basically, the demand for dollars, if someone brings, no one is going to buy dollars from the bank, just give nothing. No, they have to bring rupees and give it to the bank and ask for dollars. So that means I'm compressing my function on rupees on something else to buy dollars. So basically, that means also the banking for whoever. I'm not buying a lunch packet or I'm not buying a TV or a phone. I'm compressing that and I'm giving those dollars to the bank and asking dollars. And once I get the dollars, I will buy a phone or whatever. At the same time, the rupees that I give, the bank has the option to lend it for someone else because now I gave the rupees by compressing my consumption to consume something to buy in dollars, but the bank also have the option to again lend it back. But what happens is if the bank doesn't add more dollars, more rupees into the system, that rupees and the dollars has to pretty much balance the system because then that rupees will be going to the bank and the bank has to invest it somewhere for a higher return. And then the bank has to give that same money to someone else, which basically I contracted by cutting down my consumption. So ideally the dollars and the rupees has to have the equal amount. At the same time, when the dollars comes into the market, as long as the central bank doesn't add a lot of money into the system, I think these both have to balance. And the currency board system is basically you call it a hard peg. Basically, you only will have rupees in the market equivalent to the dollar peg value in your reserves. So basically, if you want to increase the amount of rupees in the market, you have to basically build the reserves, and only you can release the rupees into the market, so as vice versa. So those are the two options I see, but I think the important thing is that I do your question on whether it would be sustainable. I think there's a chance that it will depreciate when the economy starts slowly recovering. But again, this recovery will be slow, and when we allow imports that mainly the essentials, and as I have always been saying, most of the micro and small medium enterprises, one of their main ingredients have to be imported. Even if you look at like a small vade near the roadside, for that gentleman to switch on the burner, that gas has to be imported, and his steel rack has to be imported. Something has to be imported even for him to add the value. It is not a Sri Lankan context. Everywhere it is the same. You have to have some imports to produce. I mean, most of the people who are watching this is using an iPhone, a phone. That has to be those, even if you produce it in Sri Lanka, those chips and semiconductors and all that, some level of importation needs to take place. Most of the people who are watching using computers, they are fuel, they are electricity. There's an import component, like it or not, because that's how complicated the production cycle is. So this if we want to to keep that lifestyle moving, but of course for imports we need dollars, but for dollars it is the rupee demand that creates the demand for dollars. Otherwise, it won't. Otherwise, there won't be a, I think, depreciation, because you can keep the exchange rate fixed if you have a currency board system. But it is debatable, because the central bank has to give away one of their main tools. Because if, for an instance, when there's a situation like COVID, basically the central bank can have the option of giving money or like lending to the for their expenditure. So basically, the money printing comes mainly when the government keeps the deficit, their revenue and the expenditure. That's where the central bank basically bridges the gap by printing money.
Yeah, a couple of interesting things you said, Dhananath. Mostly to do with economic factors and how people start to measure our economic growth and our GDP, and how well the country is essentially doing with in relevance to the, what do you call it, exchange rate and the stock market. I mean, both of these things are mainly to do with liquidity, is it not? Because even in this instance, the fact that we have appreciation of any sort is because there are more dollars in the market. There are equivalent amount, or not equivalent, but more dollars than there previously were in comparison to rupees, and that's why the value of the dollar, so to say, in Sri Lanka has reduced, not globally, but in the domestic context. And like you rightly said, trade and just our livelihoods are no longer isolated. We do depend on the global aspect of trade. We import a lot of our products. Whether it be food, whether it be the small toys, electronics, personal luxuries, cars, even to build houses. A lot of things that we depend on day-to-day lives are imported. And importation and importing is something that requires dollars. And so once the dollars start to flow, as they've rightfully started flowing in, that at some point they also will start to flow out. And that is, I think, something that a lot of people need to be focused on when they're talking about, or at least planning ahead and assuming this to be long term. And to think that this is a one-off quick solution, and that the IMF coming has somehow improved sentiments and credit ratings. Because I don't know if you saw today, Bloomberg had written an article where Fitch had predicted, the Fitch credit rating had predicted that, despite the rupee appreciating so fast and so largely, that in the long term, or end of year, or I think middle of 2024, I'm not too sure how the quarter system works there, that the rupee should depreciate, or at least they predict it to depreciate another 20%. So in those situations and cases, since we have a cost-effective pricing for, I think, electricity and for fuel and a lot of these essentials, that these can also affect the consumer and the day-to-day person in a negative way. in an unsavory way, and that would, and what we are trying to do here is to try and soften the shock, as it comes, because the way this went up, at some point it does have to come down. Like you rightfully so said about the stock market, what goes up must come down at some level, unless that there's a fundamental reasoning for it to have gone up. And unfortunately, the sentiment or just the tweet from the IMF director saying that we know that the 2.9 billion bailout package, as some call it, is coming, is not enough of an economic factor for a country's or a rupee or the country's currency has. So yeah, are there any questions from the audience? We are more than willing to answer. The only reason that we thought of talking about this is because this is such a pertinent and burning question. Yeah, so
Yeah, I think let's open it for the audience as well if they have questions. I think you were, as you very correctly said, on the matters connected to the imports and the perceptions. I think that all things matters. But I think what we try to do is to provide a realistic overview, so then you can make your financial decisions on one hand, and of course you will be well aware of the situation, not to be overreactive about it. At the same, probably understand a framework, so then you can think for yourself in moving forward when things are basically moving around. Yeah, I think the Bloomberg article has basically, I think from the Fitch, has predicted that the currency will probably depreciate for about again from about, I think, 20 to 30% by end this year. So probably they must be also expecting the import pick up, and then there's high demand for dollars. Yeah, so those are the main insights. But also I would like to mention, Akila, now when you try to fix the currency at a rate, I mean 200 or 300, basically by not allowing the to have the real value, basically we are also providing wrong
definitely.
signals to the market. Now, if the actual value of the dollar is 300, and when I send the central bank says, look, we can only quote for 200, basically we are discouraging exporters to bring the dollars. At the same time, we are incentivizing importers to buy more dollars. So basically, this gap widens, because when the importers know, okay, the actual value is 300, but now the banks are saying to sell it at like 200, so they will go and buy as much as possible. And at the same time, the exporters might think, why should I bring my dollars and buy it at a subpar rate? Why should when the actual value is 300? So that's actually what happens. So it's basically like a price control, pretty much. Like when there's a price control on eggs, basically the eggs disappears. When there's a price control on rice, the rice disappears. And when there's a price control on dollars, the dollars disappears. But it doesn't mean that the floating exchange is also an option. But there are alternatives as well that we can consider. So those are the main dynamics that we should think about and get knowledgeable about these economic issues. And we are, I think, open for questions. If anyone has questions, we are happy to discuss it. And in the meantime, Akila, do you think this will have an impact on the inflation? Because with the dollar appreciation, the inflation numbers should come down. I think you broadly
Yeah,
mentioned
so
about
I
it, isn't it?
saw this argument by Governor Nandala, and what he had said was, once this starts to pass down to the consumer, that eventually that we will see a reduction in inflation, or not deflation per se, but a reduction in the rate of inflation, and probably maybe we can see it come down to a single digit. But once again, like, sure that in the short term that can happen, these things start passing down to the consumer, so the cost of living and these things reduce over time. But the question is, and like we've rightfully said so many times, is that how sustainable is something in the economic conditions of Sri Lanka, because like you rightfully said, we just basically, in my eyes, just explained that economic crisis and the forex crisis that we just had like last year, where the hard peg led to dissuasion of involvement in markets. So decisions like that, I believe, need to be taken with at least a pinch of salt, because taking action or planning long term with short term results is not really a smart thing to do. Okay, so we have a couple of questions here, Dhananath. The first is what are your thoughts on the strength of the US dollar itself? Um,
Yeah, I think with the Federal Reserve also did bit of quantitative easing during COVID time, and then they also raised the interest rates. So I think the US dollar is also now in the curve of like strengthening, and we have to also keep in mind on the US politics that is also unfolding, because US is also getting prepared for a presidential election, and there are sentiments on that. So I think that sentiments have also has to be considered. But what I have realized is also this is something. This is just a thought, thought to think about. I'm not saying this is the right thing, but when the fuel prices increase, of course, the oil producing countries. What I have observed is sometimes when the fuel prices when they control, I mean, pretty much sometimes with the supply, and when the prices go up, that also to an extent influence those leaders to go for some level of a war or some instability, because then you have a lot of money accumulating on their kitty. For an example, when the fuel during COVID time, there was negative prices on fuel, and then when of course when opened up, then of course things started moving again. And then when you have a lot of money, people feel like, okay, I should declare war with that country. I think I'm not saying the Russia-Ukraine war is because of that, but that tendency is there when you have some level of wealth, you try to basically try to interrupt your neighborhood and create some issues. So that also have to be considered. But also, of course, most of the countries, they of course adjust their interest rates with
yeah,
the US interest rates. And that's how some of these Middle Eastern countries, that's how they basically manage their economy, because when the US interest rates go up, they basically follow the same thing, and then the system stabilizes. Otherwise, if you keep low interest rates and the US interest rates go up, basically the
yeah,
money will basically flow again to the instruments in US securities in US. So that is something that we need to think about. But of course, the Federal Reserve, when of course, they also do disastrous things with their monetary policy, and that affects countries like us. I don't know actually whether they are aware of the impact that they can create by the monetary policy that they follow. Because when they do some silly things, then actually that affects the entire world. Because
yeah,
since it's a reserve currency, and we see the trend of other currencies are also now trying to competing with them and start trading and things like that.
yeah.
Yeah.
I guess those are one of the perks of being a reserve currency of the world and having the hegemony of foreign exchange. I think there's two more questions, and I think they work in tandem with each other. The first is how would this situation impact exporters, and will the current situation activate the gray market? And I think right now, seeing as that this is not an artificial, like a peg of any sort, and this is just a market reacting to the forces that it has been exposed to. Exporters, while feeling dissuaded by their reduction in rate and how much they can earn, that they have necessarily, in my opinion at least, that there's no need to be hoarding the dollars as there once was. And so when you look at the gray market, a lot of people have been expecting the gray market, to kick back in, and the Undea systems and whatnot to start again. But I don't think it's as bad as some people think it to be. Where we go into that level of deregulation or just over-regulation that leads to such things. So I don't think there'll be too much of an impact to the exporters, other than, of course, their revenue going down because the rupee has appreciated. And the current and the grey market, I don't think will be as existent and thriving as it once was during last year. Any thoughts on that, Dan?
Yeah, I think now the gray market rates are much lower than the official market rate. So basically, the gray market has shrunk over the last few weeks because banks offer better rates than the gray market. So that happens on that side. But of course, when the currency basically appreciates, it's not good news for the exporters because now they have already sometimes bought the dollars at a higher rupee value, and now it's a lower amount, so then they get affected. At the same time, as you know, when the currency appreciates, basically it's good for importers and bad for exporters. When the currency depreciates, it's good for exporters, bad for importers. So when the currency appreciates, of course, the challenge is there for exporters. That's, I think the important thing is to keep it competitive and with the market value. So then everything will get adjusted. And of course, those who peg their salaries for the
Quite
dollar
unhappy,
exchange
yes.
rate, their salaries will also come down. Yes, they will quit quite unhappy. Those are the pros and cons of the appreciation. I think the important thing is, I think to an extent, uh, a stable exchange rate is important, but how we are going to do it? Definitely, we can't do it with a soft peg or like the central bank intervening in the markets. They buy, they sell from the reserves, and just for political reasons, they manipulate the
Yeah,
markets.
definitely.
Is not the way to, definitely not the way to do it. So that those are
Yeah,
my
thank you so
broad
much,
thoughts,
Dhananath. No, I
Akila,
think
unless you
it
have
was
anything
a
else.
short and succinct discussion that was needed here, but I think it was a discussion that was imperative of the sign of times, and how conversation in society was going. Because I have a lot of people reaching out to me and asking me, I have so many dollars saved up. Do you think it's the right time to sell now, or should I wait another couple of months? Or we bought this for business, and etc. etc. And so many people asking me these questions, and I decided, why not use our platform to dispel a lot of fears and doubts that people might have, and inform those of what the reality of this appreciation is. Regardless of, I think our politicians swinging this as some benevolent doing of their own, that there are harsh realities, and you know that not everything that glitters is gold. And that's something that I wanted to put out there today, I had in this discussion with you. Yeah.
Yeah, I think also
Okay.
on the no, final thought is also on the interest rates, Akil. Now, I think one reason that the interest rates have gone up, also there's a risk premium. The central bank interest rates are about 15-16%. But since there was uncertainty of debt restructuring and all that, the market rate the retail rate is at about 30%, 28-30%. And I think the reason the interest rates are also kept at a higher level. Now, for an example, if someone want to really buy the dollars, they can, if the interest rates are low, basically you can buy rupees. Interest rate is basically the price that you pay for buying the currency. So you can buy the currency at a lower cost, or the cost of the money is what is interest rate is in simple terms. So basically you can buy the rupees at a lower cost, and when you can have increase the demand for dollars. So one reason I think the interest rates have gone up is also one is for the uncertainty. At the same time, I think the central bank is keeping it a little high. So then the economic the
Yeah.
demand for dollars also is shrinking, because basically the cost of money is high, where you can't basically quickly take money and invest in dollars is my view. That may be the reason that in the recent monetary policy review they increased the interest rate by another 100 basis points. Quite surprising. I didn't expect that to happen, but that may be the
Yeah.
reason. I really don't know. The IMF wanted to do that. But I think it also badly affects the high interest rates, badly affects the micro and small medium enterprises. They run on overdrafts and all that. So it's tough. Those are
I
my
thank you so
overall
much,
thoughts, Akhil.
for joining us today, and I thank you guys for joining us and listening to us ramble on about our thoughts on another AdvoChats. And if you guys do want to keep up on day-to-day activities and the content we push out, please follow us on social media, on YouTube, Twitter, Instagram, as you are here, Facebook, and LinkedIn. And with that, I'd like to wish you guys a happy Thursday, and that's all from us. All right, see you.
Thanks, Akhila.